Hello, everyone, and welcome back to episode 18 of WagMe TV. As always, I'm joined by the absolute homies, the one and only, the Doctor, Doc Mata, the NFT Lord himself, Alex Garcia, and the All-American, Evan Smith. How we doing, boys? How's the week treating us?
Good to be back on with you fellas. It's the bright time of my week, I think. Getting to chat with all you. So always happy to be on.
Today we raise a toast for the last episode in Evan's apartment. Evan is moving to a new apartment, so cheers to his new apartment, and we'll forever remember the OG times in this one.
The cave. I remember it was one of the first episodes. Somebody was like, "Why does this guy have his TV going on in the background?" And I had like a random NBA game, and I was like, "Yeah, all right, I'll switch that up." Just the good times, but moving on to something better. So, yeah, next episode we'll get the new environment.
Yeah, we're excited to see it, man.
Yeah, we kind of all got some different colored shirts on today. I was just
we're going around the rainbow.
Yeah,
yellow, blue, brown, and green.
Yeah.
I love it.
Just the solid colors.
No, yeah. To Mata's point, like highlight of the week, I feel like we kind of break for a week, and then like I'm kind of a little bit stressed about the markets. I'm not whatever. Then we come back here and we talk about the data. We kind of scope it out, and I feel a little I'm like, okay, we can wait this out. So yeah,
we've done a good job of zooming out. It's a lot of doom and gloom out there, and we understand that, we feel that, right? But I think when it comes to the space, it is very exciting, right? Like last week, hearing about NYC and the NFT conference there, like that was awesome, right? Great, really a highlight in my week when it came to like the space as a whole. So yeah,
absolutely.
I feel like we're kind of all in our own like Twitter spaces or like topics within Web3, so it's kind of fun like coming back, and like Zoe's been on the NFT game lately with NFT NYC and not everything else. So
I have a little surprise for us at the end of this one.
Yeah.
Great.
a little reveal might be in the books. Cool, guys. Yeah, so in terms of we can kind of jump right into it in terms of macro stuff, broader market stuff. What have you guys kind of been paying attention to? Obviously the biggest thing that's top of mind for everyone has been inflation, and when are we going to see it roll over? That's going to be like kind of the big question moving forward. What have you guys kind of been seeing broader market wise? And then we can kind of take that into Bitcoin and what we're seeing there.
Yeah, I feel like like you said, everyone's kind of waiting on pins and needles to see the CPI print, to see kind of what they're going to do in terms of hikes. I think the main concern right now, and we were talking about this before, is how much can we curve inflation on the demand side, and how much is that going to affect lowering inflation before we have to address the supply side. So a lot of people are saying we're not going to be able to totally address 8-9% inflation and bring it down to something like 2%, or like whatever the Fed target is, around 2-3%, without addressing also the supply side and not just raising hikes. So I think definitely some concerning prints, not only in the US, but UK was at 9% month or year over year last month. The whole EU as a whole is at 8.1%. We had some countries in the EU like Spain that were over 10%. So there's definitely some concern there, but I think everyone, like you said, so is just kind of waiting to see what happens.
It's brutal if you're in a country that has 10% inflation and also like 20% unemployment. That hurts.
Those are tough numbers to come back from. And I think that was something we talked about in another episode, was that some of those southern countries, southern economies in Europe are getting hit harder than like the strong northern economies, Germany, England, whoever else is up there. And so I mean, see, what was some of those numbers we saw coming out of Europe with their month over month inflation or year over year inflation? I think we got you muted.
Nice. Hey man, we're in 2022. We did the transition earlier.
There it is. There it is.
Virtual.
Wow, that was
Hey,
a
you're
corporate
muted.
moment right there. So year over year in May for the EU average, we were at 8.1 inflation, 8.1%. But to your point, it's really stacked high with energy, right? Like, so it's not like, obviously everything else is not doing so hot, but like energy's at, 39% inflation, whereas everything else is down here, near like, 3 to 6. But this is the overall EU. But like, obviously, like you said, actually Germany inflation went down year over year at the last month print. But things like, Spain was at, they got over 10% in their last print. So that's the highest since 1985 for them. So like, to your point, like Germany, maybe France, England, they're not getting hit quite as hard as like a Spain economy where the unemployment's so high. But at the same time, overall EU still not looking hot, like right around where the US is essentially, is kind of what we're seeing.
Do they have a breakdown of like real estate or rent in that report there? Because that's what I'd be kind of interested to see. Because if like Europe isn't actually in, almost like the real estate and rent sort of thing is like a demand side kind of thing, which is what the Fed is like currently trying to slow down, right? Maybe a little bit on the supply side, but overall it's like a lot of demand. So you're able to increase rents, you're able to, increase home prices, things like that. And so I'd be curious to see if a similar phenomenon is happening in Europe or not. Like that would actually be kind of interesting to see the breakdown there, because within the US, it almost seems like because we have this, overarching thing of like everyone is dealing with higher rents, right? Everyone is dealing with higher, home prices and things like that. That to me signals a lot of like demand side kind of pressure, versus on the energy side, that is just so clearly supply driven, right? And so it'd be interesting to kind of see the breakdown there if possible.
And see,
yeah, so they did
pull up that last table that you just showed really quickly. I think it had a list of all the European Union countries in there.
Yep. And this kind of goes to your, like this plays to your theory where you see like, countries like Belgium, 9.9, you see Greece, 10.7, like, and a lot of these, France, 5.8. And so like, there's a lot of countries that are doing better than the US, but then there's also, you have some of these countries that are 18.5, 20%, where, people are losing a fifth of their monetary value in 1 year, so it's like, there's just a wide range of effects on inflation.
Yeah, and I think something most recently in the news, in an event that happened, was that Lithuania stopped the transfer of goods between Russia's mainland and the ports that they have on the North Sea there. I'm not sure geographically what that is, but basically they're the main transporter between mainland and the ports. And it's something where they're going to be under immense economic pressure coming up here from Russia. And so you're seeing inflation of 18%. And, when you look at some of those like previous Soviet states, you really see inflation because increasing because of their reliance on like the Russian state. So I feel like different countries have differing factors for why their inflation numbers are higher and lower compared to like East versus West.
So one thing, sorry, keep going, Sia.
No, I was going to say, I found a little something, it's a little bit outdated. It's 2020 to 2021, but it has like the EU average increase in residential property price and like housing. So on average, it was 7.1% across the EU last year. But like, obviously you have some of these, and this actually matches up with like the countries that are seeing the highest inflation up here up top. But some of your kind of, standard EU countries like Germany and France, like they're somewhere between, 5 and 10%. Spain's actually doing okay on housing, but, they're between that 5 and 10% inflation rate on housing cost.
Interesting. It's tough to actually make much sense of that because it's so dependent on country to country.
Yeah.
But, when I think of the real estate side, just kind of what I was saying, it was, more demand side versus like the energy stuff. That's just so clearly supply side, right? And just trying to figure out what these rate hikes will actually, where will actually have impact, right? One thing that I am curious to see, when the question everyone has in mind is like, when are we going to see like a rollover type scenario, right? And so if you look at, this is just like monthly, CPI print pretty much. And so what I'm curious of, because it's measuring year over year, right? And so when you look back to, 2020, we were really like relatively low, right? And so year over year in 2021, you were working off a pretty low base effect, right? And so, when you do year over year, even a little bit of an increase will show up in the year over year data as like a more egregious like print almost. And that's kind of what we're seeing here, where like the year over year prints, because previously like the base was so low, we're getting like higher and higher prints. What I'm really curious to see is Q4 of this year, because that's when last year we actually started seeing like a material uptick, right? And so if we're still, I think like really like crazy danger time would be if we're still at the end of this year and still seeing prints in like the 8s and above. That would be like crazy, because that would mean basically 2 years running we're at the same, even with the base being so high last year, we're still exceeding that by another 8%, 9%, whatever it may be, right? My hope is that once we start hitting these kind of higher bases, right, that we're working off from last year, my hope is that we kind of see, hopefully that's when we'd see, expect to see a decrease in the year over year inflation figure if it is slowing down, right? So just something to keep an eye on. So October, I think, would be kind of the one to watch there in terms of where the base effect actually starts kind of taking hold.
Right.
No, that's a great point. That's a great point. Sorry, Evan, what were you going to say?
I was just going to say, I mean, that was the whole reason why we dropped interest rates to zero, was because we started to see, inflation just totally nosedive. Money money wasn't being spent, and you saw household balance sheets increasing record amounts, and that's always what's being talked about by JP on the Fed calls, is that household balance sheets are still strong, unemployment is low, and it's really like some of these, what he called variable inflation. So we'll see. Yeah, like it's a great point, Zoe, that later on in the year we're going to see how those numbers match up to last year, and it'll be really interesting going into early next year with the amount of interest rate hikes that we've had, how that's affecting even further, because you're right, like it's a number we got to wait to see, and then from that point then you can really start observing the effects that these interest rate hikes have had. So it's almost like still a waiting game, like we've talked about in past podcasts.
Yeah. And just one thing to note for all the viewers, and something that we discuss a lot is, just understanding that there is a decent amount of time lag with these rate hikes, right? People expect, the hike to happen this month and us to start seeing like material impacts from the rate hikes next month, the month after, even the quarter after. That's a lot of times still too soon. Sometimes you got to wait like 6 months, 2 quarters over that. And that's when you really start seeing the pull through effects that these rate hikes start having. So we'll start to get a better idea, I think, like towards the tail end of this year and into next year on like where we kind of stand. Yeah.
And that'll I think that'll also play into kind of the piece that you were talking about later in the year here, right? It's like, what are these rate hikes really doing? Are they making that much of an impact or a dent on inflation? And then what does the Fed do from there? Do they pivot? What does that actually look like? Because if we can destroy demand all we want, right? But if that supply side doesn't get fixed, it won't make that much of a difference, right? Who knows what will happen? But, it's just, again, everyone's kind of watching to see.
Cool. I believe, going kind of more into the crypto route, like Garcia, you had some some interesting charts and some interesting data points that you were looking at on the Bitcoin side. Do you want to run through some of those?
Yeah, absolutely. So one of like the first things that, and Mata actually put this in our chat, I think earlier today, but one of the things that started to alarm people is that for the first week in a long time, we started to see institutions like dumping Bitcoin, like dumping it heavily. Usually like I try to keep up on this guy James's reports like as often as I can. You know, I miss some sometimes, but a lot of times you'll see people buying, or not people, but institutions buying Bitcoin at 20, 30, $50 million a clip, like every week, like no problem. And so this last week, we saw a lot of that get erased. And especially in the month to date, we actually saw it down 400 million in the month to date. Year to date, they've still invested in Bitcoin overall, net positive. But we've actually seen a net negative investment in Ethereum. So I think there might be a lot of uncertainty around the merge. I don't really know if that's what's causing it, or if, you know, they're just getting scared of what actually could, you know, come to pass in terms of if they're able to do that correctly. But one of the big things that started to alarm people is the fact that we saw that fall for basically the first time in a few weeks. The good thing about it is that it's kind of between, you know, essentially two funds, so Purpose and 3IQ. So that's the good side. It's not like every single institution selling it, but it seems to be pretty concentrated between a couple of firms. But at the same time, like a lot of people were talking about how like, wow, like we used to see, you know, a net inflow of a lot of this institutional investment, but now we're kind of seeing a divestment from Bitcoin. But we'd love to hear your thoughts on that, guys.
Yeah.
And I was actually curious when I was looking at this, like, have these institutions released why they've, you know, pulled that much out and why there's been that much of an outflow? Like, is that something that they've talked about? Is this something to do with kind of the liquidation cascades that we've been seeing? Anything like that? Is there any sort of connection there, or is this just like by choice? You know, I don't know if that's something that's been released or not, but I remember that being a question when I was looking at it earlier. I was like, well, why is this happening all of a sudden now and in such bulk versus a week ago, 2 weeks ago, you know? So I don't really know the answer to that, but I don't know if you guys had any idea there.
Yeah, I mean, it just kind of seems like an alarming amount of size that we just saw. See, if you wouldn't mind pulling that up.
Yeah.
When you look at that month to date number, I mean, is that in millions? Is that what I saw?
Yes.
Mm-hmm.
And so that's a, you know, staggering number to look at compared to the year to date flows. So if I'm understanding this correctly, could you say that, you know, last month you would have saw the year to date flows at around 450 million? Is that what it was?
Correct.
Exactly.
Yeah.
So we actually saw the total like amount under management fall by 3,000, like, well, actually 3 billion, right? Because this is in millions. So like that fell a ton. So like we're literally just seeing a divestment from Bitcoin and Ethereum, and actually Ethereum had, like, the trend was that people were selling it like for the last like month or so. So like institutions have been selling this, you know, selling Ethereum but buying Bitcoin, and maybe that's because it's, you know, seen as the only, you know, reasonable stable asset right now to buy in the crypto market in a bear market. Yeah. But at the same time, you're totally right. Like you hit the nail on the head. Like this is a year to date flow. This literally last week was in the 400 million mark. And so this week in the next print, it's at 26 million. So they're barely net positive in Bitcoin investment year to date.
I think something to note as well, if you go a little bit down here, it says short Bitcoin as well, right? And so you don't have that much on the short Bitcoin either, but it is pretty comparable now from a year-to-date flow perspective. So not only are they pulling out of Bitcoin, but they're also not shorting it. So it's just proof of kind of that uncertainty, especially from an institutional perspective of like, we don't know where this is going. We don't know what's going on. They need to see it a little bit healthier before they start to, you know, put that capital back into it, I would assume.
Mm-hmm. I'd agree with that.
And so when you're looking at that amount under management, Sia, have you seen that number change drastically with the, you know, 60% fall off that we've had in the last 6 months? Does that get reflected on this balance sheet?
That's a great question. I guess I haven't really necessarily been paying attention to that because I guess it hasn't looked as Jurassic because I've been looking at it often. So like it's hard to, that's actually a great point. Like if we were to pull up, you know, the last like 20 of these reports, because I think he does one once a week. You know, if we pulled up the last 20 weeks, I think you'd probably see that reflected because this is US US dollars in millions. And it's not the amount of Bitcoin. So I think you'd see this fall. But that's another great point. That's another great point. 100%.
Yeah. And I think what also just kind of sticks out there is Solana and the amount of year-to-date flow they've been able to attract this year. So yeah, that's something that, I mean, we've seen that go on a roller coaster itself, but very interesting to see investor money like still flowing back into that.
Mm-hmm.
Yeah, and so I know, you know, I'll see this by James Butterfield probably every couple of weeks, but I know back in January, I mean, it was definitely in the 30 to 35 range probably for that AUM.
Mm-hmm.
And so like, to your point, it hasn't necessarily, I think this was the first one, and this is why I posted it in the chat, where it was so egregiously high from a weekly perspective, which drew down the monthly, which obviously drew down the year to date. It was just very, very egregiously high. And so I don't think it really has seen, with like the 60% drawdown that we've seen, it really hasn't correlated that much, which is why I found it interesting that all of a sudden now everyone's kind of pulling out of it versus 2, 4, 6 weeks ago, even a couple months ago, right? From an institutional perspective. So definitely something to keep an eye on. But I think, see, if you're on that CoinShares site, we could actually pull one up that's from like last year or January. I don't know if you're on that.
Oh yeah, from let's see here. I'll go to his website and see if I can pull one up from
here. I got 31st of January here.
Yeah, pull it up. That's perfect.
Can y'all see this?
Yeah.
So if we zoom in here, like here's your difference, right? 31,430 flows by asset. But look at that. Year to date flows is negative 132. But again, this is only off of data for year to date for basically just January.
Yeah.
So definitely.
And I could be speculating, but I would assume, like, if I were to guess, that's institutions taking profit on a little Bitcoin, you know, saying, okay, we're probably going to get some hikes. Like, it's probably going to affect Bitcoin. We should probably take some out now. You know, it was still in the 40 to 50K range at that point. So there's a lot of profit to be had.
Yeah, I would agree with that. And like, if we went back to like 2021 here, like, let's do like December 2021. And here's your look at kind of the end of last year, right? I mean, that's pretty massive.
I know this is all in
There's
US
your
dollars,
year-to-date inflows.
but is this all US investors as well?
Like all of these institutions here?
Yeah. Yep.
That's
I think
a great
so.
Question.
I'm pretty sure Purpose is Canadian.
Okay.
And I think there's one UK one in there too, but they're majority US. But there are there's a little sprinkling of Canadian and EU in there. But majority US. I think, like, you know, 8 out of the 10 in there are US based companies.
Yeah, I think what's most surprising about all of that to me is that we actually have a positive year-to-date number. I thought for sure that would be extremely negative just with the fall we've had. So I don't know how to read into that, but it seems like it's, you know, either people are buying back in, or yeah, I don't know. Very interesting, and I'd love if we could pull that up in like future episodes, kind of keep track of that.
Yeah, I think we should make
it's almost a little scary, because it's like, all right, so are the retail investors all just buying the dip and all the institutions are dumping on them and leaving them to hold the bag? Like, what's going on here? And that's why, you know, when I posted that to the chat this morning, it's like, whoa, it's not what we want to see. That's for sure.
And I think from like, keep going, Zoe.
Oh no, I was just gonna say, one thing you have to keep in mind, you know, when you're talking about institutional investors and like their entire job is to allocate capital, right? And so a lot of times the selling might not necessarily be because they're bearish on the space in general. It might just be because they need to balance their side of things. They might be reallocating. They might have other areas that they feel are, you know, better investments at the time being, right? And so I wouldn't necessarily, like, there is, I think, something to be said, because it seems like a lot of them are doing that. So that's a little bit like, you know, that's not a great sign. But at the same time, I wouldn't necessarily take it as like they're completely out, right? They might just be reallocating, allocating. They could still have like a decent bag, right? Just moving things around, shifting the way they're investing. It's just something to keep an eye on.
Yeah, agreed. And kind of to your point, right? If they were bearish on it, they'd probably be shorting Bitcoin, right? And that was also denoted in that table as well. So they could just be moving it around. They could just be sitting on some US dollars for a bit. Who knows, right? But definitely something to keep an eye on, and we can definitely pull that up, you know, in future episodes moving forward.
Yeah, and I feel like that kind of leads us to like the big question of when and where is the bottom. And like this is a chart that I've been looking at kind of just to like set my expectations, and I kind of check it like week over week. It looks really, really complicated, but it's not at all. And so what you have here in the blue line is the actual market cap of Bitcoin. The orange line is the realized market cap. So this is the value of a Bitcoin in a wallet the last time it was moved. So if it hasn't been moved for 6 months, it's the price it was 6 months ago, if that makes sense. So this is supposed to track like what people anticipate the price or what people expect the price to be. And then the Z-score just counts as a standard deviation to kind of take out the extraneous points between the realized market cap and the market cap. And 9 times out of 10, when the Z-score is in this red area, Bitcoin is overpriced. And then 9 times out of 10, when it's in this green zone, it's necessarily like undervalued. And so we normally don't see a switch in terms of the trend until this breaks out of the green zone again on the other side. So like you see that here, like when we break this way, like all of a sudden at this point, we're basically bullish the whole way. You know, you see that here, we're basically bullish the whole way here. And so we've kind of just started to settle in this kind of green zone on the Z-score. And so I personally, I think to Zoe's point, a lot of these firms are saying, well, there's a ton of great deals to be had in the risk on assets of like tech stocks and maybe even other stocks that have gotten beaten down. And they're saying, well, hey, we still have, you know, because historically we've spent like 3, 4, 5 months in this green zone. And so maybe some of them are saying, well, hey, like, you know, our return on Bitcoin is not going to come as quick as some of these other assets. So I don't know. It's just something I like to check on once in a while. I feel like it's kind of a cool chart. But I just kind of wanted to get your thoughts on that.
Yeah, no, I really like this website a lot. I visit it all the time. Yeah, I think you make a really good point that like when we have approached / are in this green zone, we've been there for minimum a few months.
Yeah, so this is like November to April right here.
Yeah, like minimum, it's like, and maximum, I mean, over in whatever that is, 2015, we're probably there for better part of a year.
Yeah, right? December to July or December to October. Yeah.
Yeah. So better part of a year there. So yeah, I think you make a really good point. I would completely agree with what you said. Like people are basically saying, okay, there's alpha to be generated in other parts of the investment world over crypto at the moment.
Yeah, I mean, like if you guys were to, you know, I mean, we basically are betting men because we're trying to buy Bitcoin at the bottom. But like if you were to, you know, literally toss money on it, like do you guys see us going like below 15K, like below that area? Like where do you, you know, if you were to guess, like what would you guys think? Like I'm just kind of curious.
I think for my personal opinion, we'll get below 17 again. I think that was the previous low we saw a couple weeks ago. I think we could get sub 15, but I know I've heard of a few people, especially some of those videos I showed you guys coming out of Davos saying it would get down to 8 or 9K. I don't know if it goes sub 10K. I think we could see the low teens. But granted, don't have like the TA experience that Garcia has. What do you guys think?
See if you could pull that MVRV Z-score up again. I mean, I think it's it's something to be said that, like, obviously I'm not going to call a price. Like I really don't know. But like in this green zone, even for like this indicator, for instance, right? Like it seems like we spend a while in there and we're capitulating, but it almost seems like every time we have to touch the bottom end of this green zone before we can even consider starting to move back up, right?
It's a great point.
And so it's interesting, right? We haven't even touched it there. So I haven't seen like anything great from like a TA perspective saying like, hey, we're through this and everything's ready to go and we have no further downward movement, right? It feels like there's still a lot of downward movement to be had from all these indicators that have been seen, right? And then you look at some of the past markets. I know we've talked about this before, right? Where we've had like a 95 to 90, 85%, et cetera, correction on those. What have we had to this point? Like 70 something from that low?
Yeah, we're like 75.
Right.
And I drew us down to 80 because that's kind of like we've never fallen less than 80% so far in the history of Bitcoin, but it has gotten steadily lower. So like the second to last bear market was 87%. The last one was like between 83 and 84. And now we have this one where it's like we're not quite sure what it's going to be.
Right. It's a great point to be said, right? Like we've had diminishing returns, right, within Bitcoin. So on the other half of that, why wouldn't the case be to have diminishing losses, right? So maybe that should go a little bit lower and maybe we only reach that 80% drawdown, et cetera. But it's like, even with the indicators and even if they start to like, RSI, for instance, say like we're really oversold, like the macro environment just seems so uncertain and so volatile that I don't necessarily see anything super bullish on that perspective for Bitcoin, right? We haven't seen something like this before in Bitcoin's really lifetime. We kind of made history dropping below the previous all-time high, right? Just the other day when we hit 17. So to me, it's like we're a little bit in uncharted territory. I don't know if it's necessarily going to go with all of the things that we've been, evaluating in the past. So I think it does have to drop a little bit more. Does it hit 15K? Probably, I would say. But to be honest, I don't really know. For all we know, all the institutions are sitting there waiting for it to hit 16 just so that they can buy in and undercut everybody before they can get into it. So you never know the games people are playing, especially in the crypto market, because it is still the Wild West. But I would say we do have some downward movement to go here.
Yeah, that's a good point. And if we were to do like that, let's say we did fall 80%, that would put us at that 13, 14K mark, which I don't know. I mean, maybe it seems like it's been decreasing 5 to 7% every year, somewhere in that range. So like in terms of how much we actually fall. So, I mean, I don't know. I mean, I would have to agree with you guys. I think we do see a little bit more of a leg down. The only not bullish, but the only rather kind of positive thing that we're seeing is that 9 times out of 10, at least in the history of Bitcoin, once you hit this 200-day simple moving average, it turns into support. So like this is 2020, this is 2018 bear. It happens. It's hard to see it here, but this 2016 bear, it happens. And here we actually drop below it. So I think that's probably why we kind of got a little slightly saved at this 20K mark, is because I think, just historically, this seems to be a pretty solid support for Bitcoin, but we actually dropped below that. I wouldn't be surprised if we kind of just channel range for a little and then kind of drop out and then kind of see where we go from there. But yeah, it's definitely a lot of uncertainty going on macro wise.
So you got a call for all the viewers out there? What are you calling? 5K Bitcoin?
Not financial advice at all, but
of course.
NFA.
What are you saying, Zoe?
You know the motto, dude. Don't fight the Fed.
Yeah,
don't fight the Fed. So I'm definitely still think there's some downside to go. To what level? I'm not sure, but we'll see. I mean, it's interesting pulling up that 200-day moving average chart. I pay attention to that, but it's almost now, since we're below it now, that turns into pretty solid resistance, right?
Exactly. Yeah, that's what I was thinking, right? It's going to bounce off of that in the opposite direction that we were hoping, right? So
And that's sitting at about 22K. So if we were to like magically bounce today and all of a sudden shoot to 21, I wouldn't see it going far past 22, because that's where that 200-day average is.
All right.
Awesome.
Well, I think that'll do it for the Bitcoin section. Definitely some super interesting things. Thanks for sharing all the data, you guys. I guess we can hop into kind of like a little broader like DeFi update now. A lot of different things going on. Obviously, we covered like all the Celsius stuff, 3 arrows, basically a bunch of shit hitting the fan all over the place. And we can add this. I guess this one turned out, or is seeming to turn out, a little bit better than we would have anticipated maybe a little bit before. When it was transpiring, it looked pretty doom and gloom. But a DeFi protocol on Solana called Solend almost totally went under. Really bad situation. So we want to cover that a little bit, and then kind of go into a couple other DeFi topics, FTX, and a couple of different things that we're seeing there. I can give a little bit of a overview on the situation, and we can kind of just chat about what we think is going to happen. Obviously, all these things are very intertwined, right? So everything going on with FTX, with Tether, with even previously, like all the stuff with UST, like so interconnected, and so it's just important to kind of keep a pulse on what's going on, right? So in this particular instance, this DeFi protocol called Solend, which is basically a DeFi protocol where you're able to deposit crypto assets as collateral and then mint stable coins in return, essentially borrowing against whatever holdings you have. Turns out pretty much like 90% of the assets within this protocol were coming from one big whale, right? This is a guy who had 5.7 million Solana tokens. So at the peak, this would have been over $1 billion. And this guy or girl or whatever, wherever they may be, deposited this into the protocol and then use that to mint 108 approximately million USDC worth of stable coins, right? So deposited that as collateral. He has 100-ish million of stables. And the real problem occurred because he was getting dangerously close to liquidation price, which was, I believe, at like $22 or something. And Solana had tanked to, in the 20s. And, people were freaking out because the result of this would be basically a huge liquidation of about 20% of his, collateral, which was going to be about $20+ million worth of Solana. Massive selling pressure in Solana. And then on top of that, whenever you have these huge sell-offs due to liquidation, you have scalpers coming in trying to pick up Solana at like a really bargain price, right? And people were basically saying that all this combined would have just shocked the system, sent Solana not only crashing in terms of the token, but also the network crashing in general. So a really crazy situation. There was also some drama that came afterwards because there was a vote by, the token holders of Solend and within the governance kind of protocol to say, okay, we are going to take over this whale's wallet and change at a high level, kind of change the way he's acting, which was then met with a ton of backlash because that goes against everything that decentralization and kind of crypto stands for, right? Like you can't just, as a protocol, you can't just go in and like take over somebody's wallet. Like that's just kind of crazy. So then it was then put to a vote, which was then reversed again. And now we're in a situation, I believe, Garcia, you might be able to shed some light on the current situation, but it seems to be somewhat resolved. Can you walk us through kind of how that, how they came to a little bit of a resolution and what they're doing to kind of work itself out?
Yeah. So I think you might have mentioned this before, Zoe, but originally they couldn't get in contact with this person. So that's kind of what caused like the initial like freak out. Like, listen, this, Solana could go to $22 and we could all be out of a bunch of money. But they got in contact with him about a week ago on June 21st, like in the middle of the night, like 3 a.m. our time. And he started allocating a bunch of his funds into different lending platforms. Or lending protocols on Solana. So like Mango Markets was one of them, but there's like 2 other ones and they're, not nearly as popular as Solend, but he started allocating that. And now just this past week, he started paying down some of that debt that he owed, like before he's not liquidated yet, but he started paying down some of this debt. So like just about a week ago, he paid down 11.5 million. And then again, a day after that, he paid down another 3 million. And this was 6 days ago and Solend was saying that utilization of all assets in the main pool are now at healthy levels after he paid down this additional 3 million. So they're basically saying, at least for now, they're stable. And just some little comic relief, this is just the classic, no matter how close we become, we come to crash and people still want to, leverage themselves. But at the same time, it sounds like, Solend has kind of at least somewhat stabilized it for now. But it was 100% a worry. Like June 21st, middle of the night, they thought, hey, Solana could fall to $22 in the next week and we're all screwed. But it sounds like the first step was getting in contact with the guy. The guy actually reached out, the guy or girl reached out to Solend. They started reallocating those funds, so their protocols. Then he started paying down some of this debt to make Solend a little bit more whole on that side. And now it seems like it's somewhat stable, but at the same time, he has a lot of influence over the entire. I mean, he holds a ton of, the liquidity in that protocol. So still a little bit of a concern, but it seems like at least for now, like the flood's been kind of halted somewhat. So that's kind of the recent update on it.
Sweet. Yeah. Thanks for taking us through that. It is good that at least in the short term, it seems like they've, avoided an Armageddon scenario. It is also good that they were able to kind of get in touch with this guy and get him to, switch some funds over and things like that. But just goes to highlight just how precarious a lot of this DeFi stuff is, as has been proven in the last couple of months. Yeah, crazy situation. We'll definitely be monitoring it. Obviously, that liquidation price is still there, and so if we get kind of a another drawdown in Bitcoin, obviously taking alts down even further, this could again present itself as an issue, depending on how much of this guy's stake is on the brink / could get liquidated. So we'll keep a pulse there. Just something to highlight, something that caught our eye this week. Ev, did you have some news on kind of the FTX situation over there and what's going on? Maybe with, I don't know if it was related to Tether or anything like that.
Yeah, I don't think this one was related to Tether. This was more related to BlockFi and to Voyager, who are 2 lending platforms that you can go ahead and borrow against crypto that you have. And basically, FTX has come in as a super, well-structured business that's got a great balance sheet, willing to extend their hand and offer money to companies that are basically kind of going insolvent right now. So in the last 3 days, BlockFi has received a $250 million loan from FTX, and I believe Voyager had close to a $500 million loan from FTX. And basically what that loan does is it comes in and it's almost like a way that FTX could acquire BlockFi. It isn't an official acquiree process, but basically what's happening is that there's a ton of customers on the BlockFi platform that want to be able to withdraw their funds, but because BlockFi was basically insolvent in the last week, that wasn't possible. And so when this loan came in, it allowed customers to go ahead and withdraw whatever funds they had. And so there's a couple reasons why this has been a little controversial. The first is that this loan basically makes it so that all the venture capital funds that came in and funded BlockFi, because BlockFi is a very well-funded company, they've got Series A through D. All these venture capital funds are basically put as the last priority in the payout process, where if BlockFi were to get, go under or declare bankruptcy, they would no longer be able to realize the gains that they've gotten from their investment. So there's this company or venture capital fund called Morgan Creek, and basically they've been the largest investor in BlockFi. They've helped lead or been a part of the Series A through D rounds for BlockFi. And FTX is basically coming in and saying, hey, we're going to acquire this, and all these other firms aren't able to get their money. And FTX is doing the same thing for Voyager. And so I don't believe FTX is really in this business, this short-term kind of loan business. I could be wrong on that front. But basically the reason that BlockFi and Voyager are insolvent at the moment is around ties to UST and stETH, or the Lido ETH receipt that we talked about last week, where basically there was this fund, 3 Arrow Capital out of Singapore, that had an enormous amount of stETH and UST. And the way that they had been able to acquire those assets was through lending on the BlockFi and Voyager platforms. So it's one of those things where we saw a domino fall 3 weeks ago in the Lido platform of stETH and of the UST Terra problem that we had talked about, and then this is the next domino falling of BlockFi and Voyager, seeing the repercussions of them.
Yeah, I mean, it just goes to highlight how interconnected all of this stuff is. It'll be really interesting to kind of keep a pulse on what's going on with FTX and kind of what's going on with BlockFi, and like how this ends up kind of playing itself out. But just the amount of exposure that a lot of big heads had to UST and to stETH it can't be overstated, honestly. It definitely has the potential to really wreck the whole crypto space. I think on the stETH side, I think we had discussed kind of a couple of weeks ago in like the bull case for stETH, where with the DPEG, kind of you're able to scoop Ethereum at a discount. And so if you're a long-term believer in Ethereum, this DPEG that's been caused by all this forced selling by these huge institutions could be a potential buying opportunity. Last week, I talked to a guy who actually gave me a perspective that was interesting. And I kind of want to share it with you guys because I thought it was actually the bear case for stETH, right? And so basically what he said, it was hinged on the argument that as of right now, the argument for Ethereum from a regulatory standpoint is that it can be regulated as a commodity, right? Because you are like it is a mechanism that is going towards, you pay gas fees, like that concept is kind of similar to a commodity. With the move from proof of stake or proof of work to proof of stake, that essentially like takes away that argument as of it being a commodity, which would make for the argument that it should be regulated heavily as like a security then, right? Now you take that to the staked ETH and Lido situation, right? And you have basically a bunch of people who have locked up their Ethereum. And even after that merge, you don't get your Ethereum back for quite some time, right? And so the argument that he was making is you basically have a bunch of illiquid Ethereum that even after the merge, if it goes as planned, if it goes through, is still essentially locked up for another, 8 to 12 months. And during that 12 months, there is potential for there to be like significant regulation around whether Ethereum is a security or not, which could entail a lot of people being forced into sell for tax purposes. And so you put this all together, and you basically could see a scenario where stETH is forced to depeg even further, because now it's not just institutions who are in this forced selling game of stETH to gain liquidity. It's also just like, you know, your average Joe retail folks that have their stuff locked up in stETH. So I know that was kind of a mouthful, but it was an interesting perspective. So I want to get your guys' opinion on it. There's a lot of different kind of moving parts between like the regulation, the merge, what's happening with Lido, like all these things. The depeg kind of like draws an interesting, wheels them all kind of together.
It's interesting that you bring that up too, because the most recent communication from the SEC chair that I heard was that they officially only consider Bitcoin now as a commodity. Like they wouldn't even consider regulating Ethereum as a commodity, especially with the shift to proof of stake, like you said. But I think 9 times out of 10, like the problem, especially with the cases of like sometimes Lido and then like also particularly Celsius and some of these other companies like BlockFi, they're taking their liquidity and the retail deposits and then going and leveraging those at crazy like returns, but also crazy risk. So like that was the biggest issue with Celsius. Now on the Ethereum side, obviously it's a little bit less so like that. Like it's more so obviously attached to the value of ETH, but I think the ETH merge uncertainty just leads to a lot of this. Like I think a lot of people are like, okay, well, I have this staked ETH and now I don't know when I'm going to get it back. And, no one really knows how the merge is going to go. So it's kind of like tough to understand where people are going to see the value. And I think that's a big reason why, like going back to why we saw the institutional divesting from Ethereum and then into Bitcoin, at least trending wise, I think a lot of them are saying, well, if the SEC is going to regulate Bitcoin as a commodity, I want to be over there because Ethereum is a lot more uncertain than Bitcoin.
Yeah, that's a really interesting point. And I think something that probably the average retail investor, doesn't fully understand until it comes to the end of the year, having to do their own taxes. And you start to understand the type of assets that you're holding on your own balance sheet. And so that's a great thing. And so Garcia, did you say that there were possible rumors around different regulation that could be coming towards the end of the year? Was that what I remember?
Yeah, so there's currently a bill that's being discussed. It's particularly for stable coins, but the thought around regulation is that overall it's going to be good for crypto. Short term, some of these projects are going to get destroyed. They're just going to go to zero instantly when this regulation passes because the SEC won't recognize them, as like a viable asset. So what we're expecting is, at least it might not come in November, but that's kind of the first time that it can come, is first stablecoin regulation. And then the market's going to assume, okay, well now stablecoins are regulated. The obvious next step is Bitcoin. And then the assumption is that once we get stablecoins regulated, we'll actually see some upside to Bitcoin, because people are going to say, okay, well now, like, since that's probably the most logical next step, that opens up the floodgates for some of these like larger monetary oil and pension funds that we talked about last week, where a lot of these people are sitting on, hundreds of millions, trillions of dollars in these large funds, but they can't invest in Bitcoin because it's not regulated yet. And so the first thing to go will be stable coins. That's the first thing that they're going to regulate. They've already said that. The question is, I don't know when that's going to happen, but it is on the table right now. And it could be, coming through as early as November.
And so if this is US regulation, this is probably going to be a rule where stable coins are going to have to hold, US dollars on their balance sheet, or a certain percentage that would reflect the amount of obligations they've made with their customers, right?
Yep. And so it's called the Stablecoin Trust Act, if anyone wants to look it up. But essentially the biggest concern right now, and we talked about this before we started recording, is a lot of these stable coins, like you said, especially exchanges, like they're just like quietly insolvent and they have no backing on their balance sheet.
Right.
So
Sam Bankman-Fried was one that said that.
Mm-hmm. And so their biggest concern, then the SEC chair pointed this out in the interview with Jim Cramer. He's like, yeah, like Tether is one of those that's on our list where, like, we'd probably look to regulate that in USDC first. But the biggest problem is that right now Tether is not transparent. Like, we have no idea what's on their balance sheet. So what would happen is the balance sheet will have to be reported quarter over quarter. Like, they're going to have to see what assets are pegged to it. And so, like, obviously that's going to hurt a lot of stable coins, because you're going to realize none of them have anything backing them. But the ones that are solid, the two that are left, are going to be like, they're going to start seeing some serious allocation in terms of like big funds. But that's kind of the general idea.
Right. And then at that point, it's a question of, can these stable coin protocols, generate any money on their own, I guess? Because at the end of the day, if you're just basically a store of value, what incentivizes you to continue to do that, right? Where are the incentives in that system to continue to run the infrastructure and manpower that is required to put together a stable coin? And so I think that's the biggest question of what type of regulation comes around those incentives.
Yeah, that's interesting. I almost don't think that they'll be competent enough to even think that far.
Yeah.
Like I don't know, that's betting on a lot. I think getting any sort of stablecoin regulation is going to be, tough enough. In terms of like how they're monetizing it, that's also going to be interesting. I mean, it's most probably going to be just like a normal bank. I'd probably just think they're going to tie it to like normal bank regulations. If that'd be the easiest thing for them, at least. Right. It's like you're dealing with US dollars, you're lending out US dollars. You need to like, there's definitely going to be regulation about reporting on reserves and like what you can hold as reserves. Right. There's going to be none of this algorithmic stablecoin stuff. There's not going to be like, also stable. Yeah. Like stable coins backed by like random other assets too. I don't think will be allowed. It'll probably be like, okay, you need to either have USD or, US treasuries or something, liquid dollar equivalent, in order to back up whatever reserves you have.
Yeah, that's a good point.
Yeah, I guess I don't know how, I mean, like, I also don't have, like, just to your point, so I don't have a ton of confidence that the people regulating this have any idea what they're talking about when it comes to cryptocurrency and stable coins. Like, I think we saw that like back in 2015-16 when, Mark Zuckerberg is up on the stand and they're asking him like what an API is. It's like, I think that they're probably at that stage too with like stable coins and cryptocurrency. And I guess it's like, how right do they have to get it? Like, as long as they regulate it and like recognize a couple stable coins as a secure security, and it allows other funds to come in, like, I guess, even if they get like 50 to 60% of the way there, it might be enough, to start seeing some more inflows from larger funds.
Yeah, I mean, that's a great point, right? I think from an institutional perspective and from these big buyers, right, the regulation is kind of needed here moving forward. I guess our only hope is that they don't like over-regulate or over-rotate that piece. And so once again, we're sitting here waiting to see kind of what our fate is at someone else's hands. So definitely a wild time and kind of exciting as well. But again, right, regulation, right, necessary evil probably from this perspective.
Right. And it's kind of the summer where we're seeing a few of these dominoes fall. And I'm willing to bet in the next month, we'll probably see a few others go if there really is secretly insolvent exchanges out there or, protocols. So, yeah, it'll be interesting to see what survives this year of one, solvency and regulation. So.
Yeah, I guess there's your answer to Sia's question, to just come full circle on it. There's your 15K when the next shoe drops.
Right.
That's everything.
Well, the other question is too, like the one that's been at least posed in a lot of these articles I'm reading about regulation is, does the US, China, some of these other superpowers use this kind of like gap in like regulation and adoption to introduce their own stable coins? So that's kind of another big like consideration, is like, okay, is the US going to go full on digital dollar, have their own stable coin, have it backed by US treasuries and just kick out USDC? I don't know if that's financially possible because of how much money is locked up in there right now. I guess they could just buy it. But at the same time, I've seen that thrown around, but I don't have a ton of confidence in the government to be able to create a crypto, but we'll see.
Yeah. Would that be like CBDCs? Is that what you'd be referencing there?
Yeah,
exactly.
Okay. Okay.
Yeah, I mean, I think that, you know, there's people within the government that definitely know what they're talking about when it comes to this stuff. It's just, I don't think it's the people that are making the laws, right? Like all the people who are like researching and like probably like in the FBI and CIA, like researching like serious criminals and stuff, like there must be a lot of people in like that realm that really know what they're talking about here. And that's how they're able to catch all these people. Like we were talking about that one couple in New York that got busted for having like almost 5 billion that they like apparently jacked from exchange. But if you like read like how they were like caught, it was like not, I mean, the people were pretty dumb, but at the same time, like, you know, you had to like do a decent amount of due diligence on like tracking different wallets and like, you know, doing all this stuff and like a lot of on-chain analysis and like things like that. So like, I do think there's people in the government that like know what they're talking about when it comes to this stuff. I just don't think it's the people who are actually making the laws. You know what I mean?
And I think it's been like that for a few years now, where I think it was either the original Silk Road or one of the few Silk Roads after, where, you know, they were trying to track through different you know, IP addresses that were being used on Tor, and then I think they tackled him in the San Francisco library. So, you know, there's a lot of great stories around the tracking of the FBI and, you know, how equipped they are in this space. So I totally agree, Zoe.
Well, the Time Wonderland guy got away with like a couple frauds, and then also like ran Time Wonderland for a long time.
Sure.
Are you talking about the guy that ran the treasury?
Yes.
The convicted felon.
Yes.
Yeah, that was wild. That was unreal. This dude's just managing like $1 billion treasury.
One of the best Discord fallouts we've ever seen.
And like the whole team knew about it too.
Yeah,
like,
yeah.
Oh yeah, we knew about
that. Unreal. Well, I think, you know, we're kind of good to wrap it up here. We'll be covering a lot more in you know, the weeks to come. We'll always have a pulse on kind of what's going on all throughout crypto, the economy, macroeconomic stuff, DeFi, NFTs, you name it. We'll be keeping a pulse on it. So to all the listeners, thank you so much. As always, if you enjoyed this, found it useful, like definitely remember to like and subscribe down below. And yeah, shoot us some comments, let us know what you think. And yeah, till next time, same place next week. You know the drill. Wag me.
Wag me later, fellas.